Yo, what is up? It's the Cosmic here.
Pick it up, pick it up, pick it up, pick it up.
You see the drip, yeah, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus.
Pick it up, pick it up, pick it up.
I have made a severe and continuous lapse in judgment. I have been burnt too many times by Mark. And I'm done. Oh, I'm done. Thank you so much for joining, everybody. This is the Cosmic with the Anonymous Traders Trading 101, and today we're going to go over earnings. We're going to compare Mark and XBA. Both released earnings at the same time. Mark had a conference call, XBA did not. And we're gonna kind of explore why it's not, you're not really supposed to hold through earnings, and why a positive earnings can go down and a negative earnings can go up. So let's start with Mark. I was actually on the conference call, so if you look at the transcript, that was the last question. I kind of stumbled through it, kind of fudged up. I wanted to ask for guidance instead of speculation. Don't know why I said speculation. I had a brain fart in the heat of the moment. But Mark beat their earnings. I mean, let's go here to calendar. Let's get Benzinga loading a little bit slow for me. I just have a whole lot going on right now. I'll cancel that right up there. That should help free up some CPU power. And you see that they surpassed their earnings. Alright. Their estimate was 320K. They surpassed it. I mean, not bad, right? Like, the estimate was negative 0.06 EPS, but they passed it. So you think that you'd see the stock, rise a little bit, right? No. The earnings call was honestly all hype. All hype. They said they wanted to focus on their Q1 earnings with the response to my question, but all they did was talk about new things that they're rolling out, rewards that they're winning, yada yada yada, but I'm all like, where's the sales? Where's the numbers? Where's the contracts? When are we going to see those? Reassure your investors. Provide them some guidance. And they failed to do that, and you see the stock price just completely get demolished. Completely. Went down to 175 at one point. And I expect it to go continuously down to 175. Probably, it may have one more day of downside on it before I can see a stupid tweet or something like that to make it fill the gap, because that is a big gap to fill right now. So check out the earnings. You can go to their website, just type in Mark Holdings website, and they have a replay of the earnings call and everything. It's just too long for me to go through. Next, XBA. Wow, they released earnings at the same time, and it spiked. It went from 372 to 419. Their earnings must have been fantastic. Well, let's look at it. Let's pull up their little calendar thingy. And let's see what they actually reported for their earnings on 7/6/2020. Ouch. EPS of negative 1.74. Ouch. Down $3 million in revenue from last quarter. They haven't been done this bad in revenue since they started ramping up. So Why did they spike? Their revenue was crappy. Well, they provided guidance. Go to their SEC filing, go to their and go to their quarterly report, and they provide guidance on showing how what they're doing and how it's they're setting themselves up for success and coming up. And you see Benzinga says they're trading higher after the company announced it significantly strengthened its balance sheet through the recent capital raises and debt reduction, and that it's launched its COVID-19 testing on JFK on June 22nd. But if you go down here to its their quarterly report, you scroll through it. It's way too long for me to scroll through it for y'all. Trust me, it'll be taking a while. You'll find some green words where they say guidance, and this is and what I mean is they are reassuring their shareholders, and this is the type of stuff that people want to see in earnings. Positive is also something that they want, but if they have negative earnings and they provide guidance, it definitely could increase the stock. But this is also a reason why you don't want to hold through earnings, because you have no idea what happened until they say it. And like I told you, while I'm sitting here talking, it's still just scrolling until I can find that word right here. So essentially, the company is applying the guidance implied on topic 8.12 to its derivative liabilities, but does not intend on applying to new measurements. They're essentially just saying that, hey, this is what we're doing, this is what we're in the setup for, and this is what we're hoping to expect. So that's two different ways earnings can go. Yes, XBAW did fail or didn't hold its spike, but it looks like it's coming back on a rebound. I mean, at least it didn't go down to $1 in the ones. Like, I did not expect that bad of a tank off of Mark, but I expected them to at least shed a little forecast on Q2 because they did so on Q1. But without that, fam, thank you so much for watching. Sorry for the squeaky chair. We'll be getting a new one here soon. But y'all have a great one. Stay safe. Wear a mask. Peace.
Pick it up, pick it up, pick it up, pick it up.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus.